So hello everyone and welcome to today's webinar. Today we will discuss some top reversal patterns together. So at first I'm going to start with a small introduction about who we are. Then we will discuss a bit about price action versus mean reversion. Then we'll go into the main topic of the discussion, which will be the top reversal patterns. Then what to look out for when doing charts and when looking for top reversal patterns, some currency trading dangers, and then we're going to close the session with the Q&A. Basically, I'm just going to leave this disclaimer on, and I would like to please ask you to read this carefully for 1 minute before we proceed. Okay, now that this is out of the way, let's discuss now a bit more into details. First, a small introduction. Blue Sky Forex is part of Blue Sky Binary, an education, research, and trading group, which comprises of senior traders that teach various strategies in both FX and binary options for both markets. And we offer 24-hour trade support and analysis that allow binary options and FX traders to trade safer. Blue Sky Forex is presenting this webinar on behalf of Hot Forex in order to educate you and help you, the traders, become highly profitable currency ones. Now, price action versus mean reversion. There are two types of strategies in currency trading. First of all, price action. Price action is more powerful. I'm sure you have come across the phrase, the trend is your friend. However, identifying it is a bit more difficult as a trend needs to be fueled by news in order to carry serious weight. So price action strategies, basically, it's when you see the price moving to a certain direction and then you take a decision to enter the trade in the direction of the movement that you are seeing. But for that to be successful, this trend needs to be fueled by news. It needs so that it carries serious weight. It needs to be fueled by news. This movement needs to be important and strong enough in order to continue going in the same direction, because if not, then it will start reversing back to the mean because it's not powerful enough, which then becomes a mean reversion strategy and a mean reversion environment. In a mean reversion environment, basically, mean reversion is more common, easy to identify, but can also be profitable. Basically, mean reversion is that when there is no news or nothing happening in the market, you suddenly see the price moving towards a certain direction until it actually hits a support or a resistance level or a psychological level, or it has just moved up too much and then it starts tracing. So this is something that normally happens very regularly, and trading in the opposite direction of the current movement of the price, it's called mean reversion. All types of strategies that fall into the above categories require very sound risk management procedures on your behalf in order to ensure that you are not hit by margin call or face account doing. So regardless of which environment you're in, whether you're trading price action or mean reversion, all strategies require very sound risk management. So please be very careful when you're selecting any risk level, and we will discuss a bit about the risk levels towards the end of the webinar. But now let's look into top reversal patterns. Today we will discuss some of the top reversal patterns, but we will concentrate on how you can read the charts for a reversal, and we'll also show a few examples. Basically, the ones of you that have been trading for some time now, or the newbies, if you have searched the internet, I'm sure you have come across very many names. Like there are a zillion names out there: Dark Cloud Cover, Bearish Counterattack, Evening Star, Evening Doji Star, Bearish Abandoned Baby, Bearish Gravestone. There are thousands of names there to just describe certain formation or patterns in the market that indicate reversal, right? You can search that and the list goes on and on and on and on. But how do you get about this? Do you start memorizing these patterns, how do you actually go about doing any of that? So the approach that we are taking here is showing 2 or 3 main reversal patterns, some main chart patterns, but basically what we're looking to do afterwards, actually we're going to discuss what are the main things that you should be looking at when you are trying to find those patterns, so that they can help you understand when it's actually a reversal is pending, right? Is imminent. So my advice, in any way I can give it, is and also it will be a personal thing, personal opinion, is that, to be honest, I don't know all of these names what they mean, right? But I can understand, because all of them is just a different explanation. It's just different representation of these 4 things here. So if you start understanding how to use these 4 things here, then I'm sure you will be able to understand where when a reversal may be happening or not in the market. So what to look for, so that you don't get lost in the frenzy with the names, is you should be looking for exhaustion signs, for reversal signs. You should be looking at the chart for support or resistance levels, points, and also you should be able to get help from various indicators. And we will be showing examples of these later on. First of all, though, let's discuss a few patterns, like actual chart patterns that can be indicative of a reversion. Okay, many of you have come across the terms shooting star or hammer. Basically, let's start with the shooting star. These 2 are shooting stars. So basically, a shooting star is a 1 candle formation, only 1 candle, this one, or it will be this one, so it could be red or green. You may find different names about this, but it is what it is. So basically, it's a long wick on top of a very small candle body. So, and because this is like a shooting star, like a star that falls from the sky, leaving a big tail on top of it, that's why it's called this name, right? So basically, what this shows, because you need to go down into what this shows in order to understand how it could help you. Basically, this shows that the price tried to any questions you may have, we will discuss this at the end. So basically, what you see here is a long wick on top of a very small candle body, right? So this thing here, this means that the price tried to move up a lot, but then faced heavy resistance and then went down. So basically, this looks like somewhere around here, somewhere at the top, there's a strong resistance level. Okay, somewhere at the top. So basically, the price tried to breach that point, and then it was not able to do it. So maybe a reversal, so price moving downwards, could be happening soon. Okay, so this is what it represents. So the price tried to move up, and but then it faced a heavy resistance. Now this one is what I call hammers, because they have, as you see here, it looks like a hammer. Basically, you have a long wick at the bottom and a very small body on top. This means that the price is the opposite, that the price tried to move down, but then it faced heavy support at this level, the price, and then it shot up. Okay, so these are the 2 things. So these are a shooting star and a hammer. One candlestick, one candlebar formation that so that the price tried to move down here or try to move up, but then faced heavy resistance. So it could be an indicator that the price is moving up. This one. Okay, dojis. Dojis mean serious indecision in the market. Okay, so the price is somewhere stuck, doesn't know where to move. It tried to move up a lot or try to move down, and then got repressed again. Okay, same here. So basically, if you see this at the end of a long trend, then this is a sign of reversal. Basically, a sign of exhaustion, and then maybe could be interpreted as a sign of reversal as well. Okay, so this is another thing. So basically, what you take from this one candle bar formation is basically a lot of indecision in the market. Here both sides, and here a lot of resistance or a lot of support at this level. Okay, so these are the two things you should take into account. So it's the indecision and the existence of support or resistance. Now, let's see two more patterns. These patterns consist of two candles, not just one. So here you have the bearish engulfing and the bullish engulfing. So basically, what is a bearish engulfing? Basically, is the price has moved up and has created this candle, but then a new candle is created, which is bigger. You see here, it's bigger than the previous one. So this red candle engulfs the previous green one, and this is a strong sign of reversal. So the price moved up, faced a resistance level around here, and then the price shot down. So this is a resistance level here, and this is a pattern that shows reversal. Okay, and the opposite is here. So after the price has moved down, then the next candle is green candle that is bigger. It engulfs the previous red one. So this is another strong of reversal. Okay. Another one that shows that could be a sign of a reversal is called the haramis. And you can have all different sorts of combinations here of colors. I have just done those two here. Basically, this means, again, you should trying to understand what this means, what those candles represent, what they show to you. So this time, this one shows that there has been a long movement, big movement. The price moved up a lot, and then the price, the range that is explored by the next candle is very small. So any movement towards that direction seems to be fading now. Okay. Now whether this became red or green, or it's very, it's close to relevant. But the thing is, what actually is the important thing right now is that you have a big enough candle body here, some wicks, and then here it's very small body and small wicks. So the price actually doesn't want to go further. It stops. It doesn't want to go further. That's how you should interpret that. And that could be a strong also of revival. Again, any question, we'll discuss them afterwards. But again, those we'll discuss this afterwards, and we have some valid questions so far regarding, for example, time frames. So the time frames here are, in FX trading, you should be looking at higher time frames, so 1 hour, 4 hour. But then we will also look at how you should be, what you should be doing with the time frames, and how you should be performing a multi-time frame analysis in order to understand and if what you're seeing is actually valid. So let's keep that a question for the end. So in this case, again, you have a red movement, price moving downwards, and then you see here, again, a very small candle body with small wicks, which basically, again, shows that the price doesn't really want to go further, has stopped, did not try and move further, right? So this is another sign that there could be a reversal happening. As you've seen, I'm using the words could be a lot because we're not sure, right? You're never sure. And just by judging at 2 candle bodies and wicks, or just 2 or 3 candles, is not enough. You should be looking at more information. So what to look for so that you don't get lost in the frenzy? You should be looking at exhaustion signs, right? You should be looking at candles having increasingly smaller candle bodies. So as you move on in time, you have smaller candle bodies, so the movement is actually, if they are of the same color, of course, so the movement is steadily losing steam. And also you see longer wicks, so longer indecision starts to set in the price, right? So these are 2 things that are signs for you, right? Reversal signs. So basically, at the end of the price movement, and you could be seeing reversal signs, like for example here, like the golfing, where the price immediately turns into change direction. that kicks in immediately or just right after exhaustion, so right just after you've had a doji, right? Then, or a harami, then the price moves in the opposite direction. These are all signs. You should always be looking at support and resistance levels, nearby support and resistance levels. Either these are technical or psychological, and we've already done a webinar on support and resistance levels before, which is available to you inside your hot forex panel. But support and resistance levels points are very important when you're trading reversals, right? And also, you need to be getting help from different indicators, okay? Like RSI, MACD, or other indicators are could be useful as well. Don't try and do one of the above. Try and find as many of the above as you can in order to support your decision. Now, the most important thing what I want to discuss today is I want to show you, have here 3 or 4 examples of how you could identify that a reversal is coming, okay? And another thing is when to spot your entry point or what you should do. So let's start with this. This is a chart from something that I picked up today. I think it was GBP if I remember correctly, but anyway, that's not important. I just want to show you a few things. So here you start seeing one green candle, second green candle, third green candle that starts to have a lot of indecision, which is one sign. Doesn't actually, this is not a sign of reversal. It is a kind of a shooting star, but sorry, sound like a hammer, but okay, not a big deal so far. But then here, what happens is that afterwards, you see the price moving up, and then down a lot, and then you see a long wick exposed. And this is something like a shooting star, but not really, because the candle body is not that small. But actually, what's important here is that this looks like an engulfing. It's barely, it's almost an engulfing. But again, we don't actually look for that specific word, that specific. So this has to be bigger. No, this is just, we try to interpret the signs of the market. So the sign is, this is something like, this shows exhaustion on the way back, on the way down. This shows exhaustion on top. Also here you have the price reaching the top Bollinger Band in a flat channel, in a relative flat channel, which means resistance level. So it hits that, it goes down, and then here what you see is the price after this shooting, kind of like a shooting star is created here, the price again moves down, and then more indecision sets in. You see longer wicks, and then again the same thing here happens. Longer wick, it goes down and hits the support level. Again, Bollinger Bands are flattish, which is a good sign for Bollinger Bands. So you can, this could be Bollinger Bounce. And then here, the price starts moving again upwards. And here you have engulfing, which is a sign that the price is probably going to be going up. This is a very good sign of reversal here, this one. And again, you see this, and even you see here now more decision kicking in, right? For example, these are 2 cases here on the same chart within, by the way, this is an hourly time frame. And this is basically for those of you that are mainly scalpers. So basically, these here are great points of entry that could get you 20, 30 pips. So again, a lot of indecision here, a lot of indecision here. You get the reversal, you get the resistance from the top band, the top Bollinger Band. So that's a technical support, resistance point. Price starts moving downwards. Get the resistance from a technical point. See engulfing here. So all these are good signs that the price is moving up. Okay. So this is the first example. Now, if you notice a bit, this is what happened afterwards. So the previous example stops here, this third candle, and this example is what happens actually afterwards. Okay. So what happens exactly afterwards is basically you see the price breaching this Bollinger Band going up, but again it's a long body. Okay. But now you see a shooting star, right? A shooting star on top at the Bollinger Bands at the Bollinger Band level, that's a pretty good sign because it combines both the candle body, the candle wick being very high, so it's a shooting star at the top, which means that the price tried to move up a lot, but it faced heavy resistance. So it's probably, since you tried that before here and trying that here and got so much resistance, then this thing here is a very good sign of a reversal. So going short here will be an answer. Okay, so you see what's happening. So in quick succession, you have a few opportunities for your scalpers. Okay, again, this is a combination of heavy indecision in the market together with a support or resistance level. Okay, and then the price is reversing. Now, this is a bit more complex chart, but basically the yellow lines here for you is Fibonacci levels that I have drawn basically from the start of the drop. There was a big drop from the start of the drop here, below here until here. This is the start of the drop, start and end of the drop, and I drew a Fibonacci level here, Fibonacci chart here. Fibonacci levels can be drawn on your MT4 automatically. They have there's a button somewhere at the top that says F, and you can draw Fibonacci levels. And basically, we've covered Fibonacci in a separate webinar, but I want to show this example for a few reasons. First of all, you see there is a drop here. Although the drop is not immediate, it doesn't happen in one candle or two candles, it has happened over time. But here you see a lot of indecision, and here at the end you see price moving just a very little bit, and also there's heavy exhaustion here. And also this is like a shooting star slash doji slash shooting star. So basically, I don't care about the name. I care that there's a very small candle body, and there are small relative wicks, but there's a long wick on top. This is what I actually care. Okay, so at the end of the drop, I see this thing. So for me, that could be a sign of a reversal. Okay, so and indeed, here comes the first reversal. Now, when you're drawing Fibonacci levels, what do you expect to get? You expect to see reversal until the first level of the drop, or the first Fibonacci level, and then if that is reached, you expect the price to go up to the second Fibonacci level, most of the times, and most likely it will retrace in one of the Fibonacci levels. Okay, not always the first one, because the first one has smaller resistance than the second one, and the third one has even higher resistance than the second one, and so on and so forth. So, but basically, what happens here is, again, when it reaches that second point, you see, not only it reaches it almost, but also you have the shooting star here, which means that the price tried to go, but it was heavily retraced. So that is also a sign of a reversal. So basically, what I wanted to show you with this example is that how you can use the chart, the candle patterns that we discussed earlier, together with indicators, though, together with Fibonacci. Okay, I know that these are not all opportunities that all of you, especially the ones that are doing scalping, like, right? But these could be opportunities, and these are just examples. So one here, a second example here. But now, why have I actually given this example here? Why is this an example here? So basically, why I like this here is because I wanted to have this here because this is RSI, okay? And a great way to trade RSI is not when it goes below, when it is below 30, go for a call. When it's above, sorry, for a long, when it's above 70, go for a short, and whatever. No, this is not a way to trade RSI. The way to trade RSI is because, as you see here, it has been below 30 for a long time, right here. What is important when you're trading RSI is when the RSI moves above the territory of 30, when it has been below for some time before, okay? And especially the second time that it tries to do that. Okay, that is something that's happening with RSI. And we have another webinar on RSI. But basically, you need to be trading RSI. It's not need to be trading. Sorry, wrong expression. It's useful to trade RSI and to look at RSI when it's moving from below 30 to above 30 for taking long trades. Okay, not when it's absolute value. It's the relative movement that counts. So here, look at what has happened. Again, it was a big drop. Again, indecision starts setting in, right? And you could tell that this looks something like a hammer, not really. But then again, you see some indecision here and some indecision at this level, right? At the 1.630 level. You see there's support here. But then what you notice when the price moves up, then RSI is moving up above 30. So this is a chance. This also means whole thing here means reversal. It means that the price now is most likely going to start moving upwards because RSI is moving away from that territory and going upwards, which is actually the case what's going on here. Okay, so basically what I wanted to show you with this is basically that was another thing we discussed, is that don't trade the candle body itself and the wick, the one candle bar that you're seeing, the two candlesticks, trying to use them in conjunction together with other indicators. And this is an example of how to use a reversal pattern together with RSI, and this is how you could use reversals together with either this one or this one together with Fibonacci. Okay, so basically, before going to the next slide, I'm just going to go back and say that you should be looking at, I don't actually care about these names. I mean, what you should be looking at is exhaustion signs, long candles, long candle wicks, or small candle bodies together when they are shown together. Okay, and then you should be looking at your charts to find support and resistance levels, either technical or psychological, and also help from other indicators. So the more you're able to combine, and you've shown here examples of how you could combine all of them, the better it is for your trade. Okay? Now, spotting the above patterns is only the first step. There are some other things you should be doing as well. First of all, always check the news to avoid unpleasant surprises. When you're trading reversals, then it means that there are no imminent news coming up, no news that can actually spoil what you've actually done, and also no news coming afterwards, or no very important news that have caused your price to enter into a price movement, right, into a heavy price movement. You don't want to do that. So you want to stay away from news when you're trying to trade the top reversal patterns. Okay. Then do a multi-time frame analysis. Basically, all the things that we discussed was 1 hour, 4 hour charts. Okay. Now, any trade that you want to be making, again in forex, you need to be doing a multi-time frame analysis. You need to be seeing, which means actually, after you see something that you like in one time frame, then go on the next one on the 4 hour chart, then go on the daily, and see if actually that trade that you're about to take actually makes sense. Okay, in other charts, or if you could actually see, or if you don't see the same image in other charts as well. Okay, always do a sense check. Always check on other time frames. Okay, don't just trade on 1 hour chart or only on one time frame. Okay, always consider your risk reward ratio. Take profit to take profit to stop loss should be 2 to 1. Okay, and again, do not martingale, which means that don't chase a position. Never chase positions. Okay, if it's gone, it's gone. Leave it. If it has hit your stop loss, it has hit your stop loss. Don't try and chase a trade. Now, let's discuss a few currency trading dangers. First of all, do not trade bots. Do not trust bots. 99% of them are scams that are driven by affiliate marketers that are not traders. Expert advisors are very dangerous and very few work on a longer term basis. Be very careful. 5% of traders make money in FX in the long run. So understand that in order to beat the market for a living, you need to take time to understand the strategy and the system. Otherwise, you are gambling. Don't expect that FX is easy, trading FX. It requires knowledge and requires a strategy and a system. Blowing your account is not a bad thing. It is part of every trader's journey to eventual success and teaches you the flip side of making trades, namely money management. Start small, set levels small. So basically, every trader has blown an account. Every trader. Okay? And if they're lucky, then they have only blown one account. Most likely they have blown more than one account. I'm telling this for all of you newbies there or anyone there that it's not such a bad thing as long as you learn from it and you know why you've done wrong, what you've done wrong, and also how you could resolve that. So always start with a small account and set leverage levels small. That's very important, and then take it one step at a time. Okay. 5% of signal services and rooms are legitimate, so be very careful when investing your hard-earned money into them. Always ask for a performance record and another trade. A lot of you are into forex trading. Most of you are in order to make money, which of course I understand. We're all in for the same thing, but a lot of you want to make it fast, and they go ahead and sign up to signal services, signals rooms, or into auto traders, and end up most of the times losing money. Okay, when you do that, ask for a performance record and another trade before you actually sign up to the service. Okay, ask and always trade in a demo account and see if actually all what they're saying is actually true. Okay, now it's time for questions. Please, you can ask your questions right now. I'll start answering them. And if you have any further questions, you can address your queries to webinars@hotforex.com. And please note that this session has been recorded and will be available to you in your Hot Forex panel. Okay, I'm waiting for your questions. First question that I see right now is which time this refers to. Okay, it's from one and it's about the time frame. So basically, main time frames is 1 hour, 1 hour, and 4 hour chart. But all these apply also in daily chart. Okay, all this. So they have same technical analysis and all the patterns apply in all charts. But if you always do a sense check in the other charts when you're trading. Would you apply Fibonacci again to confirm a reversal? In order to apply Fibonacci, you need to have a long enough drop or movement or increase in price, right? So you need to have a long enough movement in order to actually apply Fibonacci. So in the question, if I would apply Fibonacci again, it depends on how big the movement is. There was a question. How do I apply candlesticks and Fibonacci on a downtrend? I know how to apply it on an uptrend. It's the same thing. It's exactly the same thing, but the opposite direction. So you need to start from the instead of starting from the start of the drop to go to the end of the drop. You need to start from the start of the increase of the price and end up your Fibonacci level up to the way that your price you see a reversal. You see that it stopped increasing. Sorry, trying to understand the question here. It is, a second. Is it advisable to take the same trade after it hits stop loss because of news, then it retraces and goes in the direction that you had before? Okay, first of all, here's okay. This is non-handler. Sorry if I pronounced it wrong. So non-handler. In your situation, so the first error was that you placed a trade. You had a trade open when news were coming, so you're losing the trade because of the news. And now you're saying that the news were not enough to actually for your price to start moving. Were not enough for the price to start moving in the opposite direction of your trade. So now after the retracement, you want to take again the same trade as the previous one, because now there will be no news. I think the market has changed, and since you last took the trade, so you should take into account the news that happened, and also before entering the new trade. So for me, it would be again in the realm of do not chase a trade. So I will just leave that opportunity, go on to the next one. Okay, that opportunity lost, just move on to the next one. Candlesticks on a smaller time frame may show a different market behavior than bigger time frame. How do you know which to go with, whether to buy or sell? So this is a great question. Basically, okay, this is a great question. So it depends on if you want to do, if you're a scalper or if you are trading more on fundamentals. If you're a scalper, you can look into the 5 minutes or 15 minutes, maximum 1 hour, and just take some trades there. Okay, and basically what happens is that in the 5 minutes you could be going for 5 minutes or 15 minutes, you could be going for a smaller win than actually on another time frame. So how would you know? Basically, in the larger time frame, accommodate a smaller movement within it, that you can identify from the smaller time frames. So if you're looking at the daily chart, then that has a lot of room for movement inside the 5 minute or the 1 hour chart. So you're not trying to see the exact same pattern. You're just trying to see if it makes sense on other charts to actually make the trade. Okay, you're not trying to find the exact pattern, you won't be able to get that. You're just trying to see if it makes sense. So for example, if on a 1 hour chart you see that the price is moving up, let's say it's in an upward trend, there have been no news though, no important news, the price is in an upward trend, but on the daily chart you see that for the last few days it has failed to break that level, which is right now, then what takes more important than the hourly chart is the daily chart. So most likely at that point you will face the price will face the resistance. Okay, so it depends on which chart you're in and what you're trying to accomplish, but always do a sense check in other charts. I think I missed the question. 1 second, I'm trying to find it. I am late, first 10 minutes. Please show the snap for pattern. Abdul Rahim, Mr. Abdul Rahim, this presentation has been saved, has been recorded, so you can see everything afterwards. And I don't understand what the snap for pattern means, but I think I went over during after the first 10 minutes. I went back and read what was the important thing. I see a couple of you raising hands. This is not the way. I cannot. The raising hand doesn't mean anything to me as an organizer. Please type your question that way I can get the information that you want and actually answer that. I have a question from Azlin Malek. That was one of the questions that I missed. I'm not sure about harami and the color sign. If a green harami candle appears after a red candle, the direction of the next candle will be red. So if a green harami appears after a red candle, no. So if a green harami appears after a red candle, the direction of the next candle will be red. No, basically, if a green harami appears after a red candle, most likely means that the price that tried to move down is not going to continue moving down, or that's what's causing decision, and the price may reverse. Okay, so you will see. So if a green comes after a red, then most likely you will see a green one coming afterwards. But by itself, this doesn't say a lot. You need to be seeing what other, if it's near support or resistance levels, or what were the previous signs, the previous charts, the previous candles, and everything. So that's why I said, just checking at one candlestick, one candle bar is not enough. You need always to be looking at here, support resistance levels. Here from indicators. Can I get a recording of this or a PDF file of this lecture? I came in late from official duty. Dear Michael, please note that it has been recorded and will be uploaded today or tomorrow inside your Hot Forex panel. Follow-up question from Malek. Shouldn't the direction after harami be the opposite of the direction of an engulfing, logically speaking? I understand what you're saying, Malek. The thing is, by itself, it depends on, again, it depends on what, how you interpret that. How do you interpret a smaller candle? If you interpret that, by the way, please note that harami can be, it's not like engulfing, it definitely has to be. So let's go back. A second. So let me go back. So engulfing here, and engulfing means that the next candle is always bigger than the previous one. Okay, and that's why this is a stronger movement, let's say, than the previous one. So it is a sign of reversal going that way. For a harami, you don't have to. A harami could be if you have a green and a green, not only if you have a green and a red. So it's not the opposite of the engulfing. One, and B, how you should interpret that. Again, I'm not looking at the candles because the haramis could be with either colors, other color combination. What I'm actually interested in is what it tells me, what the price is telling me, what the chart is telling me. The chart is telling me that the price moved a lot earlier, and it formed a big enough candle body, but then that price movement towards that direction, so here now in an upward direction, then that whole price movement that was very big, now it's very small towards that direction. So the price doesn't actually want to move to that direction a lot. So any steam that you may have had, then it's actually more or less has stopped. This is the interpretation that I would get. Okay. This is because haramis doesn't care the colors, but the interpretation. This is what I saw in you. So here, after a green or a red haram here, then the price in theory could go down, most likely than not. But again, I cannot just tell you you cannot just assume by just seeing two candlesticks. No, you need to be seeing more and where they are on the chart and relative to other candlesticks and relative to Bollinger Bands and near support resistance levels, etc., etc. I hope that helped. By the way, if you have any further questions, Malek, you can email us directly, and also you can email Hot Forex directly, or you can email me directly at support@blueskybinary.com. Again, support@blueskybinary.com, and we can take this further if you want. Now, a second, we have another question. The question, thank you for the comment. The webinar has been recorded. And a question from Prem Kumar: why is the volume not taken into consideration along with this price action? With volume, can we interpret more? Very good question. All this movement that we're saying here will mean that there's not enough volume in the market to actually for the price to be moving, etc. We're not talking about. Sorry, we're not talking about low liquidity times or anything like that, where charts can be a bit misleading sometimes as well. Yes, Malek, the question is, should we trade in the direction of the trend after retracement? I don't like the word should we trade. There are opportunities to trade in the direction of the trend after retracement. Yes, there are opportunities like that. And especially, we have gone over another webinar, but actually what you should do is you should wait until after that retracement reaches a certain level of support or resistance, and then start going again to the same direction as before. So basically, what I would like to say, let's say in an upward movement, in an upward trend, you have a small retracement to the MA or the Bollinger Bands, and then at that point, because the MA serves as a logical support level for northern trends, then that could be an entry point for you to go long. Example. So as I'm waiting for another question, I would like to let you know that you can find more information about us and Blue Sky Binary at www.blueskybinary.com, and we offer also an education course both in FX and binary options, and also we offer we offer also some solutions for an auto trader, and it's called Melissa. It's been live and it's been actually winning in pips. You can find all the information that you want at www.blueskybinary.com. You can always try all of our products with a demo account, of course, and there's also a free trial. So as I said, we're not in the category of the signal services that don't offer any performance record or not the trailer. We offer free advice as well. Another question, can I catch this webinar later? Yes, this webinar has been great. Yes, this webinar has been recorded and you can find it later in your Hot Forex panel. Another question, which program is that again, Melissa? Yes, it's called Melissa. You can find it at www.blueskybinary.com and through Signal Hive, through .signalhive.com, and you can find it there. It's an expert advisor, and again, it can be connected to a demo account, and it's free for the first week, so you can try it out on a demo account again. And you can ask also at support@blueskybinary.com and get a performance record and another trail. It's a live MyFX book link. If you have any more questions, please let me know. Last call for questions. Okay, everyone, thank you very much. I would like to thank you for your time here. If you have any questions, you can email us later at webinars@hotforex.com, and see you again next time. Have a great day ahead. And please remember that this webinar has been recorded. Thank you.